Hey everybody, welcome to the Head Startup. On today's video, I want to talk about, are your investments safe if these trading platforms go bust? The market has been pretty crazy over the last few weeks, especially with the Wall Street bets movement. Unless you've been living under a stone, I'm sure you know what's been happening with the Wall Street bets movement, but basically they tried to stick it to the hedge funds. But in the process of this, they accidentally nearly brought down some of the retail brokerages with them. The short squeeze forced Robinhood to raise an extra $1 billion in cash so they could hedge all their open positions. And this had a similar effect on a lot of other retail brokerages. So that begs the question, what would happen if any of these brokerages ever collapsed? Would your investments be safe? Stick around and I'm going to talk about exactly what the situation is for EU investors who use Etoro, Degiro, Trading 212 and Revolut Trading. So I have some good news and bad news depending on whatever trading platform you use. So the good news is, if you're an EU citizen, there's an EU directive that's been around for donkey's years, and it says that all firms supplying investing services must provide an investor compensation scheme that gives at least €20,000 in compensation per investor. So obviously this is the minimum level depending on whatever level of investment you have. So if you have less than that, I think it goes up to maybe 90% of your value that you have invested, or else 20,000, whatever is the lower amount. So why I say there's good news and bad news is, the good news is if you use Degiro or Etoro, or if you're even using Trading 212, which is based in the UK, you still get this €20,000 compensation scheme, which is great to have that kind of backup if there's ever such a worst case scenario. But this is not the case for Revolut Trading, and I'm going to go through this in a little bit more detail and explain why. Revolut has a financial license with the FCA in the UK, but this only covers it to be an authorised electronic money institution. So this is everything related to permission to issue e-money and provide payment services, but nothing to do with trading at all. So what you would really describe Revolut is as an introducing broker. Revolut itself doesn't have an actual broker license. So this has an effect of them not being able to give you an investor compensation scheme. Revolut aren't directly responsible for any trades that you make. Another third party is. So that third party is called Revolut. So they are a broker in the US, and they actually execute all of the trades for Revolut. I was reading an interesting blog post about a guy who tried to trace basically where your money goes when you make a trade on Revolut. And it actually passes through a good few hands before it finally gets executed. So he goes through the structure of the company and everything. I'll leave a link for it in the description if anybody wants to read a little bit more about that. But here, now let's just have a look at the policy. So Revolut even say this in their policies here on their website. So let's have a look here. So in the event of an insolvency of the third-party broker, so that is Revolut in this instance, or as any of the other guys that are in this chain of command involved with executing your orders, this may result in your position being liquidated without your consent or transferred to another broker. In such circumstances, we will seek to provide you with as much additional information as we can in relation to treatment of your existing positions as and when we obtain it, but please be aware you could lose your investment value. That's a little bit scary when you read it like that. So it's hard to be 100% confident that your investments will be safe if there is some sort of black swan event in the future which puts someone under a lot of pressure, or puts one of these companies that they deal with in a lot of pressure and they go to the wall. Will us as the investors be the ones that really pay for it? What Revolut say they do to try and protect us is they use a principle called safeguarding. So if you have any money in your investment account that's not invested, they should have an equal amount in a ring-fenced account that nobody can touch in the case of a liquidation. But that's just your investment money that you have not in your wallet that you haven't invested. I'm not sure what the story is with the shares you've actually bought through the Revolut Trading app. So it's a bit of a shame that you don't have some sort of backup of a third party where you're guaranteed some sort of compensation like you would be with Degiro or Etoro, for instance. So that really puts them ahead in my books for investment wise and choosing them. And the rumors we've seen floating about around Robinhood in the last few weeks surrounding this Wall Street bets movement, and how they put a hold on people actually being able to buy and sell GameStop and AMC and other stocks. It would make you a bit more wary when you don't have an investor compensation scheme to help you out if they were irresponsible in how they are protecting your money and your investments. So that's something just to consider and do a bit of research on. There's not very much information out there about it, but you will find a few nuggets if you go digging a bit deeper. But I hope you found this information valuable, and if you did, make sure to like the video and subscribe to my channel.